My friends, we meet again. And if you're an OG here, do you remember my intro? Welcome back as always to Continues to Tick. If you remember that intro, you're an OG. But I always like having fun with these style videos. They're more narrative, a little bit more personal. But as promised on my last week's video, this is my portfolio goal recap, where I plan to recap my progress over the last year's dividend portfolio of 2022. I always think it's important to be transparent. I mean, this journey is supposed to be long. I have a lot of time on my side, and as you can tell by this channel clearly, I think about time a lot. I mean, it's the whole base of this channel as time continues to tick. But one thing that's always been important to me, it's always setting goals. Because in order to understand and be able to see exactly where it is that you're going, you got to know where it is that you're going to. And one of the best ways to do that is just set goals. Set goals in your life. Set goals in finances, in your physique, in areas you want to grow. Set goals for your relationship. A lot of this is stemming from you. So as long as you continually set goals for yourself and continually want to get better and be better, finances is just one of them. So for me personally, I'm a big proponent. I like setting goals in my finances. Because this way you can see, did you hit your target? And if not, why was that? And if you did hit your target, was it easy to hit it? Can you push it a little bit more next time? And that's how we grow, friends. That is how we grow. But as we make our way through this video, of course, I'm going to start off with the recap of 2022. I'm going to let you know the amount I actually funded over the past year. And did I personally hit my goal for 2022? I did include a little note here where I said I did change my strategy. And if you've been here for a while, you know, and I'll probably go into it. I did have a prior strategy with this portfolio. I was funneling it very, very quickly. But that strategy did change in September of last year. And it changed slightly, or I guess pretty drastically. The money's still being saved, but just in a different way with a different plan. And I'll explain that as we go into that section. But another thing I'll cover is just my plan going into 2023. What is my new set goal for this portfolio for 2023? And how did I actually get this number? I'll make sure to break it down to explain it to you guys with the breakdown. A lot of it is just going to be napkin calculations, but I think it'd be nice for you guys to get a grasp as to how it is that I come up with my numbers for my portfolio, which in turn lead to the numbers for my goal. It's quite simple, really, and they're pretty accurate. The most important piece that I'll recommend is just staying the course. Once you come up with your goal, the set amount number that you find that works for you, it's a matter of, do you have the discipline, the desire, the ability to avoid temptations to hit that goal, hit that number? And honestly, friends, it's just to stay the course. Are you able to do that? And a lot of it, that's what it comes down to. And then as we make our way further in the video as well, along with my napkin calculations, I'll just give you some breakdown tips that I used in order to do that. And with that will be an example where I actually break it down as well. But just to start this week's video, friends, let's go into the portfolio. I'm not going to go super in depth because I do these on a monthly basis. This really isn't the point of this particular video, but just on the surface, my portfolio is currently at $65,654.52. If you've been here for a while, you do know, or if you're new, just as a reminder, I did start this portfolio ultimately on July 20th of the year 2020. That was the year where COVID was just kicking all our butts, right? The market had just dipped. People were scared to fund into their portfolios, maybe create some type of investing strategy. For me personally, it was a very rocky time, but I just jumped in. And that's where I kind of came up with the idea that, and I guess it solidified it for me. There really is no best time to invest. The best time to invest will always be today. And especially if you have time on your side. Time is that secret ingredient. If you have it on your side, it doesn't necessarily matter when you invest. What may matter is when you exit. That part may actually matter. I mean, can you imagine having to exit when that huge dip happened during COVID? So for me, I realized it doesn't matter so much when you start. It matters mostly when you exit. But you also got to be wise. Don't put all your money into, GoPro stock at its peak and then now want to exit when it's completely invisible now. It's like crashed at this point. So just be wise with your money ultimately, but just in the general sense, there's no best time to invest. The best time, if we had to pick one, would be today, to just start. But with that little ramble out the way, our total gain for now is $6,890.92, with a total return of 21.44%. So based on our list here, I'm going to tell you guys how much it is that I actually funded this last year, and ultimately what this means moving forward. And I'll also touch on, did I hit my goal? So as you can see here, I started my portfolio in the year 2020, and I funded in that year $12,700. So this was me going at a pace of $500 every single week. And I know it's quick. That's a very quick pace. I know for me, I don't even think I'm investing that much in my month, but I was able to invest that every single week at that time. When I first started this portfolio, I was around 24 years old. And I just got hired as an RN, and I was really trying to push as much money as I could. I have talked about videos in the past where what is the best way to invest so much, or invest at such a frequency with such a volume. And honestly, friends, it just stems from your income. One of the best things you could do for yourself is just find ways to increase your income. You can invest all you want, but if you're only able to invest $25 every week, and you can only do that for years on end, decades on end, it's going to be really hard for you to retire early. So I do advise, if you do want to retire early, you do want a substantial portfolio, just find ways to increase your income. Here in 2021, just moving along, this was my perfect peak year. I'm so proud of this year. Doing the math, $500 every single week over 52 weeks is a total of $26,000. So 2021, I was perfect, flawless. I did my goal to a T. I hit my stride. And the best way to do that, friends, is have that income, but also just set automatic deposits. With automatic deposits, you never have to think about how much it is that you're funding. You never have to worry about, oh, did I fund this week? Just set it on automatic and forget about it. Just make sure you have the money. Just make sure you have the money and the funds, for that $500 or whatever amount it is that you have to clear. So in 2021, I continued what I started in 2020, which was $500 every single week, and I continued it to a T. Now in 2022, which was this last year, as you can see, I have a total amount funded of $19,500. So my strategy continued going up into this year, trying to invest $500 every single week up until about September. In September, I started to realize, I'm already 27 years old. I do want to start funding, some cash on the side for real estate. So instead of fully pushing into this dividend portfolio, I realized I wanted to push some into the portfolio, but more so, at least right now, start building up a cash reserve for the moment real estate gets better again. It may not happen, it may happen, but I want to be ready. I do feel, just considering how the markets look right now, that the housing market, possibly maybe in 3 to 4 years, maybe 2, it might look a little better than what it looks like right now. And if that's the case, I just want to be ready. I don't want to rent forever. I really don't mind it. It allows a lot of flexibility. But if possible, maybe in about 3 years is my plan, I can possibly get my first rental property either to live in or to utilize as a business. But nonetheless, I want to be ready. So this is why we saw a dip of $26,000 down to $19,500. It's because in September, I went from funding $500 every week down to funding $100 every week. And that's a noticeable gap, right? It's a noticeable difference. So that explains the drop here. But otherwise, I probably would have hit it to a T. But that's life, friends. Sometimes you have to make adjustments as you go along, and that's okay. Just make sure you definitely reanalyze your strategy, your game plan, and your goals when you do so. Don't do things blindly. And as you'll soon see here, I did run quite a bit of calculations as to, why I felt comfortable enough to do this. Even considering with this change, I'll probably show you in a future video that I'll still be hitting a multi-million-dollar dividend portfolio by the time I go to retire at the age of 50 or 52 at the latest. And I'm excited to show you that video, because if you enjoy this one with the calculations and the more technical style, that one's even more detail and more clarity, and just an insight into how it is that I come up with these numbers, ultimately for my plan. You can definitely transfer it to yours. But this brings us now into 2023. As you can see, we got $400 so far, but that's because we're about 4 weeks in or so, and every single week I'm funding in $100. So far so good. Like I've said, I have those automatic deposits going into this portfolio, so there's really no reason as to why I won't continue to hit my stride, at least for this year's goal, which I'll share with you here in a moment as well. But now for the big question, did I actually hit my goal for 2022? I didn't, friends, and I'm not really disappointed, because I knew that I wasn't going to hit it just because I did change my strategy. But if you do remember my last year's video, where I do in the beginning of the year explain to you my goal at that time, my goal for 2022 was $73,000. And as you can see, I only made it up to 65. So I was short, so I didn't hit my goal. And that's just me being transparent with you guys. And there's a reason behind it, but nonetheless, I didn't hit it. But like I said, that's okay. Now going into this new year of 2023, I have to reanalyze everything because the volume that I invest into the portfolio has changed. But I do hope to hit this goal for this year of 2023. So now, what is my plan going into 2023? What is my new set portfolio goal for 2023? And how did I get this number? So just breaking it down here by the projected numbers, like I said, a lot of this is just napkin calculations, but for the most part, they're pretty good. They're rough estimate numbers because I have to deal with rough estimate income and things like that. For the most part, it's all set, but the markets fluctuate, and there's other just outside sources, that can get in the way with these numbers. So that's why I call them napkin calculations, because anything could change at any point. But the amount that I do funnel, I don't believe that number will change. The only number that can change possibly is maybe the dividend payouts that I get, as well as the potential growth that I would receive, over this upcoming year. But other than that, everything's pretty set. But my biggest tip, friends, for doing your own napkin calculations or breaking down your numbers is just to know your numbers. Know your numbers. And what do I mean by that? Well, I mean to find out your actual or projected income for this upcoming year and determine your expenses from there. Find out how much you pay in rent, what your utilities are a month, how much do you actually spend on food every month, gas, things like that. And through that, you'll find your budget, really, right? And then even further still through that, you're going to find out how much you can actually invest on a weekly basis. I'm a big proponent of investing weekly and setting automatic deposits. I just find the more consistency, the better dollar cost average happens over time, by doing it on a weekly basis. But that's just preference, really. And then you're going to use these numbers as a projected guideline. This is going to be your guideline, your pathway. When you're thinking of an end goal, you're thinking of, what does the path look like? Is there even a path? But if you have an end goal and no path in between, it's going to be darkness. You're not going to know exactly which route to take. That's why I really like setting goals and setting a guideline. And what the guideline is just ultimately more clarity to hit that goal. Knowing your numbers is an example of this guideline, of this pathway. And once you have that, friends, you just got to stay the course. Do things that are going to make you hit that goal. One way to do it is just set automatic deposits, right? Set those automatic deposits, and before you know it, it's going to happen. Just because through that, you're going to be staying the course. You'll have no option otherwise. Everything is automatic. So just going into my 2023 goal, this is an example of my breakdown. So like I said earlier, my weekly funnel at this point is $100. So I do $100 times the 52 weeks in a year. This gives me a total amount that I plan to fund into this portfolio this year in 2023 of an amount of $5,200. And then if you saw my last week's video, you can see we're practically at the dividend yearly drip mark of $2,000. And this number is only going to grow over this year, and we're maybe about $50 short from it right now. So this is just an approximation, but approximately $2,000. And I did mention the word drip here. That's because I am dripping these dividends back into the portfolio. What does that mean? That means I'm reinvesting them. So everything I get paid in dividends, I'm reinvesting right back into the dividend portfolio. And this leads to a total amount of my funnel with the dividend drip amount of $7,200. So this is the total amount that I plan to fund into my portfolio for the year 2023 with my fund and my dividend drip. So keep that number in mind as we now go to the drip calculator that I personally like to use so I can calculate some growth. So this is a dividend hue calc. I think it's dividendhuecalc.org. But if you just type in dividend drip calculator on Google, you're going to end up at this website. Just click on the link that says the dividend hue calc, and this is where it will take you. This is actually one of my favorite calculators to use. You know, for the most part, it's pretty accurate. I used it to calculate my numbers over the last couple years, you know, of the 2021, 2022, and now I'm using it for 2023. But this is also just a quite neat and honestly pretty fun calculator to use, because if you run numbers in different scenarios, you can come up with very neat outcomes, you know, over time. If you want to see this number or this current path over, you know, the next 30 years or so, it'll give you that number. And it's really neat. I'm not sponsored or anything by this website, but it's just one that I highly, highly recommend. I use it all the time, even just to play around. I get my partner tired of me speaking about it because I do run numbers, and, you know, they're pretty much like simulations. I just run them, and it's fun, it's neat. But here we are with the principal amount balance. So this is a starting point, right? My dividend portfolio currently is $65,000. And then it says employee monthly contributions. So what this means is how much am I going to fund into this portfolio of $65,000 on a monthly basis. So yeah, you know, I do $100 every week. So that would technically be $100 or $400 a month, but it says $433. So Jesse, why does it say $433? Well, there's 52 weeks in a year, so doing $100 times 52 weeks, the number is going to be slightly higher than $400 a month. So just divide $5,200 by 12, and it'll come out to 433. So that's how I got that number, just for, you know, a higher level of accuracy. And then current company price of stock, it's always going to be 1. Just leave that always at 1. And then expected percentage increase of stock price annually. I just do conservatively 7%. You can play around and do 9, 10% or less if you're feeling like you know, this year's going to be a down year. But I just do 7. It's pretty conservative. And then number of years to invest. I was playing around because I do plan to have this strategy for 3 years. But otherwise, you know, I'd just leave it for 1. And then current dividend yield, I have it at 3%, which is, you know, an approximation of an average, I'd say, of my portfolio. You can do less, you can do more. And then expected dividend growth rate, I have it set at 5%. I think that's pretty conservative as well. And it's kind of like a goal that I have. I want my portfolio growth to be an average of 5%. I think a lot of dividend investors would say that, if not more. Maybe some of you guys want more. But just run the calculation here. So this is with 1 year, so it changes slightly, right? So we start at $65,000. We contributed $5,196. Which is pretty close to my $5,200. And then my growth here is expected to be, with the 7%, with the dividend yield and the dividend growth rate increase, it's expected to be $4,550. And then as far as dividends go, I expect to be paid, you know, approximately $1,950, or like how I mentioned, you know, about $2,000. And this leads to an end balance, friends, of $76,696. And through this number here, let me show you. We scroll down a little bit here, and this is my projected outcome. So my goal for 2023 is an amount of $76,000. My current portfolio is $65,000 with a projected gain of approximately $11,000. So I do feel like this is a pretty conservative number. I like to stay on the conservative side. I don't know how you set your goals, friends. But for me, when I set goals, I like to push myself a little, but I also like to keep it realistic. So $76,000 appears to be a realistic goal for me. I like hitting them. I like hitting my marks. You can make it higher, but if you hit your mark, it gives you that confidence. I don't know if you've ever started anything that you really do feel uncomfortable with, but if you break it down in little chunks, and you obtain those little chunks one piece at a time, it starts to build this level of confidence. I lost some confidence over this last year, right? I didn't hit my goal. But, there's an explanation behind it. Even although saying that, though, I didn't hit it. So I hope to hit this one. It's a pretty conservative amount of $76,000. So just in case you're wondering, that's where I got my number. But just playing with this calculator a little bit. So one of the underlying goals that I have is to ultimately start to dip my toe into real estate. So I plan to invest in this way over the next 3 years. I want to, by the age of 30, have started a real estate portfolio of my own. So just changing this to 3 years here, because over the next 3 years, I'm likely going to be going at this pace. And it's way slower than $500 every week. But as you see here, by the end of year 3, I should still, at the age of 30, have approximately a $100,000 dividend portfolio. And that would be really neat if I can ultimately build up a cash reserve over the next 3 years and just be ready to jump onto real estate and still have a dividend portfolio over $100,000 or around there. That'd be a really big success for me. I'd be so stoked with that, because it would be at this point, roughly around the age of 30, 31, or 29, that I'll once again be able to fund $500 every single week and continue my path of really trying to hit that multi-million-dollar dividend portfolio. But I really do hope this video was helpful, friends. I'm always running numbers all the time. I think it's one of the best ways to really truly understand where it is that you want to go in life and actually be able to obtain it. I set goals all the time. Apart from finances, I've been setting a goal to also increase my income. And how am I doing that? Well, I'm doing that by going back to school, because I realized if I do get a master's degree, it'll open up a door, possibly get my foot in, and substantially increase my income. And that would only just supersede, further fuel this process. But growth is in all areas, friends. Set goals for yourself, push yourself, but like I said, make them obtainable. Give yourself that confidence by hitting these goals in stride. Don't set one and not be able to hit it and then lose confidence. That's how goals can also be damaging. But if you do it, methodically, you're careful, and you're strategic with it, setting goals and hitting them is one of the best ways to grow. And it's also one of the best ways to hold yourself accountable. So just some tips from me as time continues to tick. But that's going to be it for this week's video, friends. We'll see which one I upload next week. But just know the dividend portfolio continues. And I'll continually be here. And hopefully you will too. See you on the next one.